Hi guys, this is Richard from the Stable Center, and today I'll be covering Chainlink. So, full disclosure, I do own Chainlink, but nothing I say in this video is financial advice. Anyway, today we'll start things off with more stablecoin adoption. So, big news from Europe's banking giant, Deutsche Bank, currently worth over $54 billion, is making moves into the cryptocurrency space. And yes, it involves stablecoins. They are either launching their own stablecoin or joining forces with other banks to build one together. Either way, this is massive. Stablecoins are obviously digital dollars or euros pegged one to real cash, and Deutsche Bank wants in. Why? Because tokenized money could make global payments 30% cheaper and way faster. Think wire transfers, payroll, cross border deals all happening in seconds instead of days. And this comes as new cryptocurrency laws like MiCA in Europe and the Genius Stablecoin Act in the United States are setting the stage for regulated, real world stablecoin adoption. Now, Deutsche Bank isn't alone. JP Morgan, Citibank, Bank of America, they are all building blockchain payment rails. Now, Germany's top bank is joining the party. Bottom line, the old school banks are getting serious about digital money. And when legacy institutions start backing stablecoins, it's no longer just a crypto thing. It's the future of finance, hence the title of this video, Stablecoin SuperCycle. So let's see how Chainlink fits into the stablecoin narrative. So Chainlink is actually one of the only cryptocurrencies that can prove a stablecoin is actually backed by real money. Chainlink provides proof of reserve. Think of it as a live automatic audit. It checks if every USDC or other stablecoin really has cash or treasuries backing it. No middleman, no guessing, just facts published on chain. Chainlink connects to banks, custodians, or vaults holding those reserves. It grabs the data, verifies it, and pushes it to the blockchain. So you and everyone else can see the stablecoin is backed in real time. Now, why does this matter? So, without proof of reserve, stablecoins are simply just promises. With Chainlink, they become trustworthy, transparent, and secure. It's what keeps big institutions and DeFi players safe from rug pulls. And just to prove a point that a huge amount of money is flowing into not only stablecoins, but also into stablecoin infrastructure like Circle, the USDC stablecoin issuer. So Circle just smashed its New York Stock Exchange debut. Circle IPO'd at $31 per share and absolutely exploded, skyrocketing to over $120 per share on day two. That's nearly quadruple the initial public offering price. It's also the first major publicly traded cryptocurrency company debut since Coinbase in 2021. So not only is Circle's valuation crazy, but USDC, the stablecoin issued by Circle, just crossed over $6 trillion in Q1 transactional volume. So following up on the last XRP video, we are seeing real mainstream adoption of cryptocurrency. And if you believe in blockchain's future, this is a mega milestone. All right, let's move into the Chainlink analysis. So let's start the Chainlink analysis off with some risk and regression analysis. So if you take a look at the right-hand side of your screen, you can see various risk levels. The colder colors, like blue and green, represent times of low risk, which are the best times to purchase Chainlink, and the warmer colors, like orange and red, represent times of high risk, which are the worst times to purchase Chainlink. For example, if we go back to May of 2021, back when the price of Chainlink was at $52.20, we had a red risk level of zero point 0.9, which was the worst time to buy Chainlink. We can also go back to January of 2018, back when the price of Chainlink was at $1.38 and had a red risk level of 1, which was once again the worst time to buy Chainlink. Fast forward to today, Chainlink has a pink risk level of zero point zero 0.01, which means that buying Chainlink today is low risk, not financial advice. The simple idea behind risk analysis is to basically purchase Chainlink in times of low risk and take profits in times of high risk. When the price of Chainlink finally begins to rally, we'll know to start taking profits when Chainlink starts printing warmer risk level readings, preferably above zero point 0.6. Okay, so let's take things one step further by adding the regression lines. So, regression is really just a fancy word used by mathematicians to say lines of best fit. The best times to sell Chainlink is when Chainlink is trading above the red regression line, indicating that Chainlink is overvalued, and the best times to buy Chainlink is when Chainlink is trading near or under the green bottom regression line, indicating that Chainlink is undervalued. Now, if we combine both risk and regression analysis, we can see that right now, Chainlink is printing a pink risk level under the green bottom regression line, indicating that Chainlink is undervalued and that buying Chainlink today is low risk. Furthermore, there have only been two other times in Chainlink's history besides today where the price of Chainlink traded below the green bottom regression line and printed a pink risk level. The first time being in December of 2018 when the price of Chainlink was trading at 20 cents, and the second time being in June of 2022 when the price of Chainlink was trading at $5.89. On the flip side, note that the two previous bull market tops in 2017 and 2021 ended up with the price of Chainlink above the red peak regression line, printing a red risk level of at least zero point 0.9. If you follow my cursor, if the crypto sector tops out in November and December, like in previous cryptocurrency market cycles, we are potentially looking at a $538 Chainlink for this bull market. Now, moving over to TradingView, let me just get the template set up. We can see that Chainlink, very similar to XRP, is trading in Wyckoff Accumulation. We can see on screen that both LPSs, which stand for last point of supply, bottomed inside the blue Fibonacci retracement support areas. Typically speaking, in Wyckoff accumulation, we will normally see around 2 to 3 last points of supplies before the real breakout. So I truly do believe this is one of the last buying opportunities for Chainlink. Now, in order for me to confirm that a breakout is about to occur, I need to see Chainlink break above the white Wyckoff demand trend line and hold above it as support. Currently, Chainlink is just sitting right above the blue Fibonacci retracement support area. So another reason why I believe Chainlink is about to break out is because I traded a very similar Wyckoff accumulation back in the middle of last year, and it was SoFi stock. So as you can see, the amount of time it took from the initial sign of strength, SOS, to the last LPS, last point of supply, took roughly 371 days. Now going back to Chainlink, the amount of time it took from the initial sign of strength, SOS, to the last LPS, last point of supply, took roughly 392 days. That's another reason why I believe this is one of the last opportunities to add on to your Chainlink stack before the eventual breakout. So let's actually talk about price targets now. So the only two price targets I'll show for this video is at $59 and anywhere between $92 and $131. And the reason for that is because what's the point of talking about 3 to 4 digit price targets when the price of Chainlink is barely holding above 2 digits? So let me show you how I'm calculating these price targets. So one method you can use to measure bear market bottoms and bull market tops is by taking the first Fibonacci retracement off the initial impulse of the extreme pivot. So if we take a Fibonacci retracement off the 2021 bull market top, you can see that the Fibonacci retracement caught the 2023 bear market bottom. Now let's do the exact same thing in reverse. So let's take a Fibonacci retracement off the 2023 bear market bottom. And we can see that the Fibonacci retracement is projecting a potential $59 bull market top. Now, $59 doesn't have to mean a bull market top, it's just a likely area where smart money and whales are going to take some profit. Chainlink can easily top out at higher Fibonacci ratios. But like I said before, let's talk about 3 to 4 digit price targets when the price of Chainlink actually gets moving. All right, so let's close things off with the last piece of news. Mabel Finance just dropped a new yield-paying stablecoin on Solana. It's called Syrup USDC. It's native to Solana, backed by $30 million in liquidity, and pays you around 6.5% APY just for holding it. So, how is this possible? Thanks to Chainlink's CCIP, Syrup USDC can move seamlessly between Ethereum and Solana. You can mint the token on Solana, enjoy dirt cheap fees, super fast speeds, and can use it for high level DeFi strategies like looping, lending, or leverage. This is important because Solana's already got $11 billion in stablecoins, and this move is pushing Solana even closer to becoming the decentralized finance hub. Now, in regards to Chainlink, it's not just oracles anymore. Chainlink is becoming the infrastructure backbone of all decentralized finance. Without it, Syrup USDC wouldn't even be possible. All right, that's all I got for this video. Thank you guys for watching, and I'll see you guys in the next one.